Now, I want to talk a little bit about affordability and opportunity here. For somebody who's putting a minimum of 3% down, how exactly does MI help them enter the market faster?
Well, because most of the time you look at it like you have to save 20%, right? I mean, saving 3% versus saving 20% is a huge gap in cost. And if it gets you into the market sooner, right? We've all seen the home values go up, up, up and away. I mean, by being able to buy that home sooner by only having that 3%, you're growing that equity in your home as well faster,
Right.
right? So it's really what it's there for.
And here, let me ask you this, because I get this question asked a lot as well. Somebody that purchased a home for 3% has the PMI, and all of a sudden won the lottery or came across some money and want to put a significant amount of money down to eliminate the mortgage insurance. Is there like a time frame they have to stick with the mortgage insurance? Can they get rid of it right away, or do they have to stick with it for a certain amount of time?
Well, I always default this to Fannie and Freddie because we cancel the MI whenever the servicer tells us to. But Fannie and Freddie did change their rules a little bit, and they didn't really have a time frame anymore when you pay down the original loan amount to the 20% marker. However, I always like to preface that there is a servicer in the mix, right? And they can have some overlays on that. And sometimes they can be 12 months to 2 years to keep it.